we think it could still get to 200K. Obviously, that would be an extraordinarily move. And even I think maybe it won't fully get there, but I think it's going to move directionally in that way because all the trends that would drive it there are in place. Regulation is still positive. Institutional demand is still positive. I think there is just this wall of existing holders who have been willing to sell and have kept the price down. But I think we'll close the year. I think we have new all-time highs ahead of us before the close of the year. I think we'll make a run up towards 150 and then possibly beyond. All Bitcoin needs to do to get to $1.3 million within the next decade is take roughly 25% of the gold market. It's 10% now. It needs to go to 25.
Matt Hougan begins by pointing out that we're at a fascinating moment in financial history. He says that if you look at hard assets, gold, silver, or Bitcoin, their recent performance is screaming that something fundamental is shifting in the global economy. There are two massive forces driving this change. First, there's broad-based debasement. The value of fiat currencies is eroding as governments around the world continue to print and borrow at record levels. We see the evidence everywhere: sky-high stock valuations, soaring home prices, and an explosion in government debt.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
We're at a fascinating part when you look at something like the performance of hard metals or gold or Bitcoin over recent time periods. They're screaming to you that something is going on in the economy. I think what people may be missing, and you hinted at this with your gold in the East, digital in the West, is there's sort of two things going on that I see when I look at the gold price today. One, I definitely see broad-based debasement across all asset classes being reflected in hard assets generally. So, we're seeing sky-high PE ratios, we're seeing home price increases, we're seeing federal debt going to record levels, and I think that is a key factor in why gold is above $400,000 and why Bitcoin is at 115. And to premise or to hint toward your next question, I still think is going substantially higher. So I do think that broad-based debasement trade is in place. The other piece that's in place, and we're just seeing a hard twist, a hard shift from central banks around the world out of US Treasuries and into gold. And I don't think you can ignore the fact that that is happening too. So I think you have two things impacting gold, one thing impacting Bitcoin. But broadly speaking, as this chart shows, there just has been a lot of debasement of assets against those hard metals. And I think that's a huge defining trend of what's going on in the economy right now. I mean, what we're seeing is continued demand. So the audience we serve, primarily professional investors, financial advisors, family offices, et cetera, institutions, sovereign wealth funds, there is persistent buying. And you see that in ETFs. Bitcoin ETFs, despite the pullback, despite the rocky October we've had, have still pulled in about $4.3 billion. It could still be a record month for ETF inflows this year, the best month ever if we get a strong uptick in the last week or so. So I think the institutional bid for crypto is just persistent and not going away. That's what I hear in my meetings. That's what we see in the flows in our funds. That's what we see in the flow in our competitors' funds. And that to me is the overwhelming story. Institutions wanting exposure. The question is, why hasn't the price reacted to that more? And I think that's a reasonable question to ask. My gut tells me I will say we haven't revised our price forecast. So we haven't changed from saying we think it could still get to 200K. Obviously, that would be an extraordinarily move. And even I think maybe it won't fully get there, but I think it's going to move directionally in that way because all the trends that would drive it there are in place. Regulation is still positive. Institutional demand is still positive. I think there is just this wall of existing holders who have been willing to sell and have kept the price down. But I think we'll close the year. I think we have new all-time highs ahead of us before the close of the year. I think we'll make a run up towards 150 and then possibly beyond. And again, we haven't revised the $200,000 target because I still think there's a world where that's possible. Maybe it's not the base case, but I certainly think it's possible. We can see end of year melt ups. We've seen them before. I think we could see them again. I think when I think of catalysts for the end of the year, I think a broad rally in risk assets, which we're seeing, I think would be positive for crypto. I think passage of the Clarity Act could be a major spur for crypto adoption. And then I think there's just some end of year seasonality that adds together. If we get all of those three things working together, I do think we could have a significantly strong November, December into the end year. The way I arrive at a valuation of Bitcoin is I ask myself, for instance, over the next 10 years, what percentage of the gold market do I think Bitcoin will take? What percentage of the offshore market? What percentage of this currency market? What percentage of these other markets? And then I add those up and divide by 21 million and you get a price target. We actually recently published a paper on this, doing it for the next 10 years. And where we arrived at a very conservative, I think, basis was at a $1.3 million price target by 2035. Now, my personal view is it'll actually exceed that. But to put that $1.3 million in context, all Bitcoin needs to do to get to $1.3 million within the next decade is take roughly 25% of the gold market. It's 10% now. It needs to go to 25. And the reason for that is that that market is expanding over time. So a lot of people think like Bitcoin has to match gold to be worth $1 million. Not true, because the gold market has been expanding like 7% a year for the last 15 years if you average it out. If it continues that, it needs to take about a quarter of the market over the next 10 years. Add the other pieces up and you get to $1.3 million. One of the reasons I love Bitcoin so much is you get to make that investment on this digital gold thesis and you get everything else for free. Like if it becomes an international currency, an international means of settlement, those are like free options that you get on top of this core store value thesis. I think when you do this, when you break it down into the various pieces, it's hard not to arrive at a very significant price target, which is why even traditional Wall Street has price targets of like $500,000 or $1 million or $3 million, which is, you don't see Wall Street putting those sorts of price targets on many assets, but they do on Bitcoin. Because if you do the underlying analysis, that's where you end up. I don't think the 4-year cycle will hold. I don't know if we'll get 10 straight years of green candles. That would be great, but I don't think the 4-year cycle will hold. The reason for that is threefold. The first is one of the primary drivers, obviously, was the Bitcoin halving. That statistically becomes half as important every 4 years. So it's just a smaller force than it was when you and I got into crypto many years ago. It was just a much bigger deal. The second is the last two down wicks, 2018 and 2022, were during periods where they were aggressively raising interest rates. As you said, the highest, fastest interest rate increase in history. And if you look forward to 2026, I just don't expect that. I think we're going to see interest rates come down, as we just discussed. So I think that is moving in a different direction. And then the big thing is we just have this institutional capital that's going to move into crypto. I think it has to move into crypto. I think they can't stay at zero. And that's going to take 5 to 10 years. And so, if you look at the average month, there's like $4 or $5 billion of Bitcoin purchases by ETFs. I think that will continue forever. Not quite forever, but for a very long time until these institutions establish their baseline position. And as a result, I think that's just going to overwhelm the 4-year cycle. Do I think there'll be down periods and maybe even down years? Of course. But right now, do I think 2026 will be an up year? I do, because this institutional capital, nothing stops that train. Nothing stops the debasement
election year.
And those are two powerful forces.
Hougan argues that Bitcoin is still in its information adoption phase. Each year, more people, institutions, and nations recognize it as part of the global financial landscape. And just like the Internet's early growth, this knowledge diffusion will continue exponentially. Combine that with persistent fiat debasement, and you get what Hougan calls the inevitability of higher Bitcoin prices. Hougan ends with a powerful analogy from venture capital. In VC, investors don't obsess over whether a startup's Series A valuation is $10 million or $30 million, because if that company succeeds, it'll be worth billions, and if it fails, it'll be worth zero.
The trends I see are Bitcoin gaining value against all other assets. That's been true for 15 years. I think it will be true for another 150. The other trend I see is every government around the world printing more money and building more debt. I don't see what reverses either of those trends until we get to everyone knowing, accepting Bitcoin, right? It's like it's in an information penetration state. And every year, more and more people know about it, and more people have accepted it as part of the world state. That seems like that has many years to run. And this other trend of infinite debt and money printing, I just haven't seen an optimistic, realistic view that reverses course. And if both of those just keep going up and to the right, the combination leads to a very, very high number. So I wish I could throw out, I don't even know how big a quadrillion is, but it sounds very big. But I wish I could throw out a number that large. But mostly I just see this as the inevitability. There's an old saying about venture capital, which is, the experts in venture capital don't worry about the valuation of a Series A investment. Is it 20 million? Is it 30 million? Is it 10 million? Who cares? It's either worth zero or it's worth $1 billion. And if it's worth $1 billion, all you care is you made the investment, whether it was 10 or 20 or 30. If it's worth zero, you lost all your money anyway. And I think that's true with something like Bitcoin. Look, I have every confidence it's going to be worth a lot. And I don't know what a lot is, but I know that it's a lot. And so I think at 115,000 or whatever it's trading at today, is that a $10 million Series A or a 20 million? I don't know. But it seems like I have enough space to be wrong and still make a lot of money. So one is you've seen long-term holders sell assets. That's just objectively true in the data. And I think that still anchors around the $100,000 price mark, which as a reminder, if you look at sort of platforms like River and others, their two primary limit orders are at 100K-ish and $1 million. So I think those are two significant sell walls where existing holders are willing to sell. And I think the primary thing is it's just taken longer than we've expected to work through that. I do think there's been some rotation into digital asset treasuries. I think there's been some rotation into ETH and Solana and other smaller assets. But mostly, I just think that it's the $100,000 price target is probably the most important price level since we crossed $100. And so it's taking some time to work through the gravity of that price and be released to the upside. I continue to think at some point, if we wear through the sell wall in and around 100K and get release, I think there's an air pocket up above. I think we could run up relatively quickly, but I've been surprised at how long it would take. I would share one note from gold, which I think I talked about a little bit on the Milk Road podcast. Everyone's saying gold is ripping. It's gone from $3,000 to $4,000 based on central bank buying. And that is true. But the other piece that is true is the central bank started buying in 2022 when the US seized Russia's assets. You saw central bank purchases double that year, and then they've stayed the same for 2022, 2023, 2024, and 2025. The interesting thing about that is it's only in 2025 that the price has really skyrocketed. And so I think what that tells you is that central bank demand had to wear through people who were willing to sell at lower levels before it exhausted that supply and the price took off. I think that may be a lesson for Bitcoin if we continue to see these flows into ETFs. Eventually, we'll wear through that supply. But yeah, we haven't yet. But as I said, we're not revising our target yet. There's going to be an endemic force that wants the dollar to be weaker, which hasn't been true for most of this chart. It's been a dollar strengthening economy for the past 20 plus years. And now for political reasons, for some of those geopolitical reasons that you were mentioning, there is going to be a force to weaken the dollar against global currencies. The challenge is that other countries are trying to do the same thing. And that's where you get that downward spiral in currency, where they all want to be more competitive than each other when they're exporting. And I do think that's going to be a challenge that actually does play into the hands of Bitcoin and crypto.
Matt Hougan sees a world where central banks diversify out of treasuries, institutions pour into digital assets, and fiat currencies continue their slow decline. In that world, Bitcoin isn't just another investment, it's the measuring stick for everything else. From $115,000 today to potentially $1.3 million within a decade, Hougan's thesis isn't just optimistic, it's mathematically grounded and historically consistent. If he's right, we're witnessing the early innings of the greatest monetary transformation in modern history. Thanks for watching. If you found this breakdown insightful, hit that like button, subscribe, and drop a comment with your own Bitcoin price target for 2035.